Ladies and gentlemen, welcome back to another Turnaround MD video. The doctor is in. Today, I want to talk about DXC's upcoming earnings report. I think it has a potential to surprise to the upside fairly significantly. Of course, I'm not a financial advisor. This is not financial advice. If you listen to what I have to say and decide to go out and make an investment decision, that's on you. That's not on me. Don't blame me if you lose money. Okay, jumping into it here. Um, the key thing that I want you to take away from this video is an IT project is contingent on one, how much the project saves the customer, and two, the financing cost of the project. If the project saves $100 and it costs $200 to finance the project, then you're probably not going to do it because you'll lose 100 bucks. On the other hand, if the financing cost is $50 and the IT project saves you $100, then you're going to do it because you'll make 50 bucks. This is outlined on the right-hand side here by the CEO of Cognizant. He walks you through the mechanism here, as well as adding a couple more details about AI. You can pause the video and watch this, but I basically just explained it to you, so there's no point. Okay, moving on. DXC's GIS and GBS businesses. I just want to quickly describe what these two businesses do. GBS stands for Global Business Solutions, or excuse me, Global Business Services, and GIS stands for Global Infrastructure Services. GBS is a premier SAP and ServiceNow partner. They have custom applications for automotive and banking, and they're industry leading for insurance software as a service. Basically, all good stuff, all high growth. On the other hand, GIS, Global Infrastructure Services, is typically old legacy IT infrastructure, mainframes, on-prem services, basically stuff that's shit. Cloud migration services, this is basically just cope because they have a lot of on-prem revenue and they have to basically offer their customers the ability to move that on-prem stuff to Amazon Web Services. Of course, when you do that, that causes huge, huge headwinds in revenue for DXC's GIS business because a lot of those on-prem services were managed by DXC. And when you move them to AWS, Amazon gets to manage them instead. Now, to make that a little bit better, DXC has an agreement with AWS to basically pay them to move stuff to Amazon over, Microsoft or IBM or whoever, the 10,000 cloud infrastructure providers. So they're going to make a little bit of money that way, but overall, it's not. It's kind of a negative trend for revenue growth in infrastructure services. And then there's security services. Something interesting in GIS is for the security team, they recently hired the COO of, or former COO of the CIA. So that's sort of interesting. I think pretty obviously he's going to leverage his connections and security clearance in the intelligence world to help DXC win some business in security. And overall, I think the macroeconomic trends there in security are pretty good for GIS. So that's also potentially an okay thing. There's also remote work infrastructure. It's called Modern Workplace. There's also like help desk and stuff like that that's in there. Kind of like a shitty business. It's been declining a lot, but something that GIS also does. The key thing here is, in most of DXC's history, GIS has been the larger business and it's been shrinking, as you can see here, by 10%, pretty much every quarter. This is over the same quarter in the previous year. And so, those are obviously pretty bad numbers. But GBS is actually now greater than 50% of DXC's revenue. And you could see up here, the red line, GBS has actually been growing. Now, what I've basically outlined here is for GBS, they have mostly a lot of discretionary spending. It's basically no maintenance. When you do maintenance, you don't really care about the interest rate because if you're maintaining an IT system and you decide to stop and the IT system breaks, then your business grinds to a halt. So the GIS business is maintenance, GBS is discretionary. That's the interest rate sensitive sort of stuff. And the blue line is the federal funds rate. So as the Fed has raised interest rates, the revenue growth rate in GBS has started to decline pretty substantially, although basically staying above 0%. So It's basically flat, and then the GIS business has, continued performing pretty terribly. Okay, so now we're going to talk about how this looks applied to the broader industry. Accenture, Cognizant, Tech Mahindra, Wipro, and DXC's GBS businesses, I basically charted the revenue growth rates of all these businesses versus interest rates. And then the black lines indicate changes in federal funds policy by the Fed. So starting off here, you have the COVID cut, and obviously, like, most of this decline here is a pause in spending by customers during COVID in the initial days. But then it came roaring back, and you saw with the zero interest rate policy, Accenture, uh, Tech Mahindra, a lot of these guys, reaching as high as 20% and in some cases even more revenue growth. And this, DXC's GBS business was no exception to this, doing pretty well for, by DXC standards. And then the Fed decided, hey, we're going to start raising interest rates because we're concerned about inflation. And as the interest rates went higher, it became more expensive to finance these IT projects, and you saw the revenue growth rates across the board decline. So what this implies is that there is a cyclical dynamic across the industry affecting everybody and making the market more difficult. Now, as the federal funds rate topped off here and they stopped raising, you've seen a lot of these guys start to post reversals, bottoming out here. And then in most recently in September, you've had the first cut in a long time. And everybody but DXC has basically reported their earnings and have all surprised on revenue. So if Accenture, Cognizant, Tech Mahindra, and Wipro suddenly have this interest rate cut and then their revenue starts to come back and they beat analyst expectations, what do you think is going to happen to DXC's GBS business? It's pretty obvious, right? They're probably going to grow revenue with the next earnings report, and they're probably going to grow revenue for GBS, obviously not in GIS. So we'll see what the overall number looks like, but I still expect it to be above the expectations of Mr. Market and, above the expectations of the analysts. And so I think it's very likely that we see a big movement upwards sometime next week. Now, just to really, really drive home the point, this is from the Cognizant earnings call. They basically say financial services return to year-over-year growth, driven by strong execution and partial return of discretionary spending. So as I've mentioned, discretionary spending is coming back. Okay, now for the conclusion of the video. Mr. Market considers DXC to be a melting iceberg. That's why they value it at only 0.28 times sales. Now DXC GBS is greater than 50% of the revenue. So DXC basically has this great opportunity to disprove Mr. Market's thesis and make people money. If the revenue growth appears to return in GBS, then it supports the idea that DXC's issues are cyclical, not structural. You know, just so nobody's surprised here, when you Google DXC, you read anything about the stock, basically people are going to be talking about how it's a shitty place to work, it's a shitty company, and the executives are horrible, and, so on and so forth. I get it, it's a shitty company, but so is Walmart, and they're one of the biggest companies in the world. So it does not necessarily translate to DXC dying. A positive surprise, I also think, has the chance to reinvigorate the workforce that is used to losing. Obviously, if you're at a company and you see the stock plummeting quarter after quarter, you're going to get pretty pissed off. So there's probably likely a if they can change people's expectations, that will be a very, very big thing for the business too. Furthermore, I think this is part of the new CEO, Raul Fernandez's strategy. We had a pretty disastrous Q4, which was 2 DXC quarters ago, not necessarily aligning with the fiscal year. And essentially in that quarter, I think Raul sandbagged for the next fiscal year because he wants to start beating on expectations. He's a sports guy. He's co-owner of Monumental Sports and Entertainment, which owns basketball teams and hockey teams as well. Um, So he knows the importance of morale and how that affects a company too. So I think there's a little bit of that at play, although this is strictly speculation. Most of this is speculation. Again, just to reiterate. Now, where could I be wrong? Obviously, I can't predict future interest rates. It's basically impossible. Nobody can. And if somebody says they can, ignore them. Employee discontent obviously remains a big issue. I don't like to see people hating where they work, so perhaps that is something that I'm wrong about here. But I don't think I am, and we'll see what happens in this next earnings report. So, you know, definitely keep an eye out for it. Again, I want to reiterate, don't take any of this as financial advice. Bet your money at your own risk, and you know, blame yourself if things don't work out. I don't know. All right, thank you everybody for listening. Hopefully, you found this informative.